walking through the snow, plastic bags on his shoes. Papa still in house, sleeping in a car. Four babies in the backseat, underneath the stars. Well, hey, work real hard. Hey, punching out with work and pay. When a little makes so much money, need a 10-ton truck.
Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. I'm so glad you could join me this Tuesday morning, March 14th, 2023. Here at Forex Smart Trade, our mission is to make you a successful currency trader and change the trajectory of your life by letting you be in control and give you that both financial freedom and lifestyle freedom to be able to do what you want when you want to do it. We do that by teaching you how to trade with our proprietary trading indicators, which are highly accurate. And one of the reasons we do these live trades is to show you how accurate they are. So with that, let's get going. We need to start by listening to this guy.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
One of the great things about the program is that we do these live trades. What distinguishes us from other programs is that we've got a very narrow focus. We've got very specific tools. There is lots and lots of information on currency trading out there, and a lot of it just isn't very good. We have such confidence in our tools and trading is that basically we offer a guarantee, and that guarantee is that once we have trained you, we will let you trade with company funds and split what you make, and eventually you can have the opportunity to trade an account of $100,000, keeping 80% of what you earn. And one of the ways we're able to do that is that we have personalized one-on-one training and continuous training. And part of that continuous training is that we do these live trade sessions where we provide instruction on how to trade so that you can see somebody who knows what they're doing, walk through their analysis, and basically learn from it and mimic it. Every morning, once you're a member, we have a live trade at 10 a.m. Every evening at 10 p.m. we also have a live trade. The morning trade tends to be a scalp trade. Evening trade tends to be a little bit longer term trade, a 10-pip trade. And we do continuous training on Wednesday evenings. We've got a training session, and also on Saturday mornings. So lots of opportunities to continue to learn, to continue to improve your craft. I work off of a checklist checklist is over here. Every day, good habit to restart your green chart so that you have whatever the most current update is, and it also refreshes your memory. It is good habit to review at the end of the day, to review the trades from the previous day to figure out what did and didn't work, so that you can continue to improve and look for, it's about incremental improvement and continuing to get better. Last night we took 3 trades. 2 of them went south. One of them was this Euro NZD. It was a 5-pip scalp. I took a look at it this morning and I can't see what went wrong, but let's take a look at it and I'll show you what I do. With the with green chart, you can go back to a specific point in time to replay what happened. I did that yesterday, 3:13. We took the trade at about 3:55, which is 13:55. So this is what we were looking at on the thick orange line trade, which is a little scalp trade. We look for what the position of the thick orange line is. And basically, if it is extended, it's a scaled line. So when it is at either 0 or 10, it's telling us that it doesn't think there's any more up in the movement or any more down in the movement. Here it was within one point of 10, so that's within the range that we'll consider that it's overextended. When it's overextended, that becomes a sell opportunity. We got confirmation of the sell opportunity here, so I've marked it. I've marked it with this middle line here. This is where I got in at the trade. I got in after. Or this is where actually we get in at that we got in here. So we got in at 1.72419, and this line is at 1.72. Come on, 419. 1.72432. So it's a little bit above. 19. It's hard to get it exact, but that's close enough. The take profit was 1.72369. So I've marked that here, and our stop loss was stop loss was 1.72646, 1.72647. So that's close enough. So I've set it up, and then I'm watching what happens. It continues to go up a little bit. Well, so this is kind of when we got in. It continues to go up. So it shot up, but it didn't take us out. Now, it may have been that the spread, that it got this high, but because the spread was in that hour, it knocked us out. But then if we go to the next hour, the trade hit. So and then, so we should have got out of this profitably. So the only thing that I can see that might have taken us out here is that on that hour between 5 and 6, the spreads open up. So what might normally be a 2-pip, not a 2-pip, a 2-point spread might expand, and maybe it expanded enough to take us out of this trade. But the signal did what it should have done. Signal did what it should have done. So I'm not sure why we got stopped out here. And then if we take a look at the overnight trade, again, going back to where we were, last night we took a buy. So let's put the time in. we were at 1610. So we got in right after 4 o'clock. So this is what we were looking at. As we, I am going to go forward. Let's go forward. It'll bring us current now, but let's see, bring us forward. The line, when I was looking at it just a little earlier this morning, the green line was sloping down. It had kicked after the hour had changed. This line had changed to a slope almost flat, horizontal, and a little bit down. And that little bit down was enough to bring us down and ended up stopping us out. On my account, when I saw that, I did hedge it. So I took a little bit of the down move. Sometimes I will remove the stop. I still think if we didn't have the stop, we will probably get this a little later today. At this point, though, because we have a news item, and we'll get to that in just a minute, I would probably, I might close the trade. I might close the trade at this point. But in any case, we did get stopped out on it. So I was okay with the signal. And that's one of those things that just happens every once in a while. So let's get on with, let's get back to looking at today's opportunities. But it is a good habit to go back and why did that trade not go the way I wanted it to go? We are technical traders. Because we're technical traders, it means we're trading based on the price action. How the charts move, and our indicators are very good at picking up or predicting the direction of the market. And if I can get the direction of the market correct, I can make a few pips on it. And really all I need is 3 10-pip trades a day, and I'll be making pretty good money. Some traders trade based on the news. Trading on the news, you're considered a fundamental trader. We want to know what that news is so we can trade around it. And the best place to get that news is going to forexfactory.com. Forex Factory breaks the news down into 3 components. Yellow is low impact, orange is medium impact, and red is high impact. I like to stay away from these red items, and I like to be out of them 2 hours beforehand. So we're within this 2-hour window. So we won't be trading the USD this morning. And the reason I like to stay out of them 2 hours beforehand is because this news is already pre-published. Somebody knows what it is, and it starts to leak out a little bit beforehand. Back in the day, when I first got out of university, I worked for a company that sold equity research service to money managers. And I have been in many a money manager's office when they'd get a phone call of something that was happening before it made the general news. So it happens, even though the publisher is the government, there are people there who, have ways of getting this information a little sooner. So to avoid that and avoid the impact of whatever this news is, and really what drives it is the expectation versus what gets published. The number CPI is going to still probably be a little bit higher than people want. And then it's just a question of whether the market is expecting that, if the number's bigger than what they're expecting or less than what they're expecting. So we're going to just stay away from the US dollar. So with that, let's get into our trade. We've got a dozen different trade signals And what we're going to do is when we train you, we will create a trade plan around your preferences that is specific to you. So the signal I use principally is something called the 10-point signal. I like to trade it off of the 1 hour chart. And I want to be 30 minutes into the chart to take the trade so the chart has a chance to form. I am looking for anywhere from 5 to 35 pips. My sweet spot tends to be 10 or 11 pips. If it's much less, I'm not really interested in it, just because the risk isn't worth it to me. I want to get in, get out, make my 10 pips, and be on to the next trade. And I am looking, when I say get in, get out, I'm looking to get in within 1 to 3 hours. And with this trade, basically, I am looking to just have all the lines line up from all the 3 sections of the indicator. So with that, let's go take a look. I know we're not going to trade the Australian the USD today, but let's just see if we see the setup just so we can get good at recognizing it. I start with the middle section of the chart, the majors and minors. The red and green line is the major indicator. Black and gray is the minor indicator. Horizontal red line is oversold line. So when the market's oversold, that's a good time to buy. Horizontal blue line is the overbought line. When the market's overbought, good time to sell. So for example, market's overbought here, lines are going down. I want to ride it through the channel, and here is the move you're looking at. Can I get a 10 pip move from down here, continuing to go down? Yes, I can, but that's just not part of my trade plan. So I want this to be oversold and the line's going up. Like this is overbought and the line's going down. Euro USD, overbought, still going up, so nothing there. Pound USD, we're approaching oversold. Majors still going down. Minors have started to turn, so nothing there. USD Canadian dollar, approaching overbought. Majors still going up. Minors have started to turn, so we don't have agreement. I want all the lines to go in one direction. As close as I can get to that, that is a higher probability that the market's going to go in that direction. If I can predict that, I can make some money. Oversold dollar Swiss franc and going down. We've got it starting to turn here. Miners starting to turn, so no agreement. USD yen overbought. Miners are starting to come down. Majors are sideways, so they're not quite there yet. So nothing on these. I am now changing. I've cloned this chart and made another chart just like it with non-USD pairs on it. Euro pound overbought going up, so nothing there. Australian dollar yen overbought. Everybody's going down. I have the double cross. The red line is crossed over the green and the black line is crossed over the red. The lines have entered the channel. I am good with that so long as I like to have the green line less than halfway, and it is. So I've got 3 points here. When I have 3 points here, I'm going to jump up to the TNTs. There are 4 different lines here, each measuring something at a different speed. 2 orange lines are going down, supporting the sell here. Dotted blue is going up. The blue lines are inversely related, so when blue goes up, that means sell. So I got 3 of the 4 here. I need a minimum of 3 out of the 4. And when I go down to the pressure, I have up pressure. That's weakening. It's weakening because it's starting to go sideways, but I have the red line on top. The red line on top counts as a point. So I've got 7 points here, 3 from the majors, 3 from the TNTs, and 1 from the pressure. However, it is evening in Australia and Japan. I want at least one of these 2 to be daytime. because one of these two aren't daytime, I'm not going to take this trade because it's going to take longer because the market isn't active right now for this to happen on a 1 hour chart. This could change. So I don't want to be in the trade for a long time. And since the market's not active, I'm going to pass. But this is the setup I'm looking for. Euro Canadian dollar, overbought going up. Australian dollar, New Zealand dollar. Here's a situation when we were in the middle of the channel. I probably wouldn't take this, but you can see we went from less steep to more steep, and the steepness of the screen line is important. And then you saw we got a nice down move. I like to catch it when it's above the blue line, maybe on the Euro USD, which I trade frequently. If I saw this, I might have jumped in here. But normally on a pair that I don't normally trade, I want to catch it up here. And now we're approaching oversold. So the move is gone. And again, right now, the other reason I probably wouldn't have taken this is because we're approaching it's evening time in both of these markets. Pound yen, overbought. Everybody's going down, double cross. So 3 points here. The lines are reasonably clustered, so that's a plus. And there's a nice steepness on the green line. That's a plus, and it's entering the channel. That's a plus. So I like this setup. 2 orange lines going down steeply, blue line going up. So 3 of the 4 telling me sell. And I have weak up pressure. What makes it weak is the slope of the lines and that the lines are spread apart. The closer these lines are, the stronger the signal. The steeper the lines, the stronger the signal. So this is almost going sideways, just a little bit up, and the red line is on top. So I've got 1 point here, 3 points here, and 3 points here. So I like this. I got 7 points. With 7 points, then I'm going to go to part 2 of my analysis. I want to confirm the setup. And I'm going to confirm the setup by looking at the 2 and the 4 hour chart. I want to make sure that the move is going in the direction that I want. So we've got a Great Britain pound, JPY sell setup. So I'm going to look at the see what the 2 and the 4 hour are telling me. And basically what I want to see is I want to see that we're overbought. The lines don't have to be going down like they are here, but I want them overbought because if for some reason this changes on the 1 hour chart, I'll be able to pick up the trade off of the 2 or the 4 hour chart. In both of these cases, we're both overbought and the lines are going down. So this is nice. I like this. If I don't get the trade here, I'll pick it up here. If I don't get the trade here, I'll pick it up here. So I like that. Now the next question is, so I like the setup. I've confirmed the setup. The next thing I want to do is figure out what's the trade worth. And to figure out what the trade is worth, I want to take a look at a clean chart where I have I can see what the trend is and where I know where the support and resistance are. So the support and resistance are spots where the candles seem to naturally stop. And I am going to use those natural stop spots to be my limits of how much of a move I'm going to take. So here, I'm going to crunch up the chart so I can get more data points to figure out where the support and resistance are. And I'm going to drop some lines in. Now on a 1 hour chart, these lines tend to be about 30 to 40 pips apart. Come on. So it stopped in here, it stopped in here. stopped over here, stopped over here. I think we got a spot in the middle here. Stopped in here, stopped in here, stopped here, over here, over here. And we're at, let's put one more in. So stopped in here, stopped in here. And let's save this. Now I'm going to open it back up because I want to look at it a little bit more. Oops, come on back. And let's see. I'll open this up. Let's spread this out a bit. So the trend here isn't previous couple of days we had a downtrend. Yesterday we had an uptrend. There's not a the reason I want to know the trend is if I'm trading against the trend, I'm going to take less pips than I'm trading with the trend. Because if we've got a downtrend as we're getting here, kind of here, I don't want to get stopped, locked out, taking a buy when it's continuing to move down, and then I'll get stopped out. So the trend here isn't all that clear. For the day, it's up, but I want to know how many pips I have till these lines. So here I've got 21 pips and up, and I've got about 38, 21 and 38. So it's about 60. So this is actually a little bit bigger than where I like to have my lines. Let's take this off here. Let's draw one more in between. So stopping right in here, right in here, right in here, over here, over here. Oops, I didn't want that. Let's move this guy up here. So again, I want to know how much room I have to this line. So I've got about 23 pips up or down, and 8 pips. So that's about 30 pips. I like these lines to be on a 1 hour chart to be about 30 pips apart, 30, 40 pips apart. So this is more in my liking. The one thing I don't like here is that this current candle has broken this line but hasn't closed on this side of the line. So there's a chance it could pull back before the hour ends, and we'd be stuck up in this section. But given the strength of the signal on the 2 and the 4 hour, I think we're okay. I am going to let's take a sell for 15 pips. A sell for 15 pips. So you can do that in your simulator, or if you are on using MetaTrader 4. So we're going to go to pound yen. I've already got it open. If it's not open, you would just go to File, New Chart, and find it. I am going to go to New Order. This account's got $9,800 in it. It is a demo account. I'm going to move the decimal place over 4 spots. So it's going to be 0.98. So I'm just going to round up to 1. I'm going to take a lot size of 1. Market execution sell. It records it. Then I am going to right click on the order, go to modify, left click. It brings the order up. we're going to take, let's take 16 pips. 16 pips, which takes us a little less than where we're at. We're going to use a 3-to-1. So 3-to-1 is 45, 48. So a 48 pip stop loss. If I click on the little red button, it calculates it for me. Then go to modify. Now it is going to drop in the take profit and stop loss. I like where the stop losses came. It's put us outside of this range where these last 3 candles were. So that means there's less of a chance we'll get stopped out. If this was touching the candles, I would move it up a little bit just so that we're outside of the range. It's close enough to 3-to-1. So we took a sell using the 10-point signal on the pound yen with a take profit of 162.688, 162.688 take profit, a stop loss of 163.299. That's 163.299, and I expect this to close within the next 3 hours. Okay, gang, thanks for joining me this morning. We will do it again Thursday morning. Thanks so much. Bye-bye.